Are you ready for a bold claim? What I'm about to speak about is one of the things that you need to master to win in crypto. And no, it's not about the new altcoin or new meme craze. It's about understanding risk in your portfolio. And it's something that a lot of people look over, and we're going to dive into why it's so critical in this video. By understanding your risk profile, it's going to help you understand the allocation of cryptocurrencies in your portfolio. Do you just have Bitcoin? Do you have Bitcoin and Ethereum? Do you have 25 or 30 or 80 different altcoins? Because of the volatile nature of cryptocurrency markets, a lot of people overextend themselves and have a risk profile that they're actually not comfortable with. You go through a bear market where we are right now, where the prices go down considerably, and you panic and you sell because you can't withstand looking at your portfolio being down so much. And that's really down to risk appetite. If you've been known to refresh your portfolio, consistently look at the cryptocurrency prices, you're addicted to it, most likely you've actually got a risk profile that is lower than what you currently have allocation to. Now, you're probably going to find yourself in one of these three categories: low risk, medium risk, or high risk. Now, how do you understand where you sit in that? Or how do you feel when your cryptocurrency goes down 20, 30, 40, 50%? How does that sit with you? How close are you to retirement? Are you getting older? Are you a lot younger and you have a higher appetite for risk? Would the thought of your portfolio being down keep you up at night? How does the idea of losing money sit with you? How does the idea of all of that crypto that you have right now in your portfolio going to zero overnight, how does that sit with you? That will give you a somewhat of an indication of where your risk appetite sits. And from there, we can now go into what are the possible allocations that you can have in your portfolio. So ask these questions for yourself. And for most people, you're probably sitting about the medium risk profile, because you've got into crypto, you're probably not coming here because you're low risk, right? But if you are super low risk and you just want some diversification or exposure to crypto, just buying Bitcoin is a great low risk profile to start out with. Just by holding Bitcoin, it's going to give you exposure to the cryptocurrency markets without getting you insane exposure to some of the lower altcoins. For a lot of people, I say you should hold at least 1% of your portfolio in Bitcoin. The asymmetric upside, the possibility of what it could do, could be life-changing for you in your portfolio, versus the downside risk is quite minimal in my opinion. We've gone through 13 years of different up and down cycles, people trying to use quantum computing to turn it off, governments banning it, right? And still here we are today, continuing to grow year on year. So I think Bitcoin is a great asset to have exposure to, even if you are low risk. Now, if you have medium risk, this is where you can start to explore some more riskier sectors. A favorite sector of mine is DeFi, or decentralized finance. I think this is a great sector that is hugely undervalued. I think it's been absolutely pummeled by the SEC and things that are going on in the macro landscape that makes DeFi really hard to be regulated or to regulate, which is pushing a lot of downwards pressure on the price. But you can start to have more exposure to your portfolio outside of Bitcoin. So maybe you add some Ethereum, maybe you're adding some DeFi or some layer ones. Again, I'm probably still think about having 50 to 70% of your portfolio in BTC and ETH, and then starting to diversify around the outside. One of the things I also recommend people in doing is when you buy some of these assets is have a play around with them. Actually play around with Ethereum. If you're going to buy Uniswap, have a play around with Uniswap and actually use the product. Get a feel for what it actually is that you're doing and what you're buying. That's going to help you understand the value proposition and give you an indication of whether it's something you actually want to buy. Now, if you're in the medium risk category, you're probably staying within the top 100 coins, right? I think there's over 2 million if you look on CoinMarketCap or CoinGecko, which is insane amount of cryptocurrencies. But if you're in the medium risk profile, you're probably looking in the top 100. So navigate your way around there. That's going to be somewhat less risky than going outside of the 100 list. Now, if you're high risk and you really are looking to maximize the most amount of risk possible in your portfolio, then you can probably go outside of the top 100. As you go further and further down the list, the more riskier these altcoins become and the more risk of them going to zero that you have, right? I believe that 95% of the cryptocurrencies out there are probably worthless and are just on hype and speculation. And a lot of them are just driven by market makers and very low trading volumes. A lot of them have very poor token economics, just giving value back to the founders and the teams creating them. So be aware of these coins as you go down, as it's the Wild West the further down you go. Again, I'd still try and utilize the tokens you're looking to buy. So whether you're buying, synthetics, or whether, you're looking at Lido or Rocket Pool and liquid staking, whether you're looking at some complex DeFi protocols or some, centralized exchange that's coming up and they have a token, utilize these products, get a feel for what you're actually doing, and understanding that value and price are two separate things. If you can understand the value of a project and a token like Bitcoin, you're going to have conviction regardless of the price. So if price goes down, you have conviction. For a lot of people, you don't have conviction because you don't even even know what you've bought, the price goes down and then you panic and you sell. So be aware of what you're buying, and that's going to help you give confidence no matter the portfolio, no matter where the market is. Now you have that information, that's going to help you create that portfolio allocation based on your risk strategy. If you need some help with some of those portfolio allocations, we have a great resource in which I'll link below. And then if you can couple that portfolio allocation strategy with the information, the confidence, the psychology, the automation, and everything else that a Collective Shift we can help you provide, you're going to be in the top 5, top 3% of all investors out there. Create that strategy, have a great team by your side and a community around you, and you've got a great winning formula. My name is Ben. I'm the founder of Collective Shift. We are Australia's leading crypto research and insights company. Hopefully that's been helpful. Let me know in the comments below, what risk appetite are you? I am probably in the high category. I'd love to hear what you are. Let me know what allocations you have in your portfolio, and I'll see you on the next episode.